Hey everybody, it is Sunday, November 25th, 2019. No, 24th, 2019. Getting ready to trade November week 5, holiday shortened week, full trading days, with full hours, Monday, Tuesday, Wednesday this coming week. No trading on Thursday, and then a half day of trading only on Friday, only trading till 1 o'clock. Okay, here is our S&P 500 quote-unquote simplified daily chart, although I added some price levels to it and have made it a little bit more complex now, but it's meant to be a clean backed out look of the S&P so that we can focus on the simple moving averages and the gaps and so on and so forth. You know that ultimately I think we're gearing towards a pullback to test the July all-time high, but the market is clearly working its way up and trying to get us to a point where it's going to be a meaningful enough pullback to make it worthwhile to pull all the way back to test that. If we were to pull back strictly just from where we're at now, we could pull back at a respectable 3.25% and still hold above the July all-time high. So if our high from last week stands and we cannot take that out, perhaps we're going to be grinding sideways, maybe more in the upper half of last week's range rather than the lower half like we did on Wednesday, Thursday, Friday. Maybe if we're going to grind in the upper half and save this move till the December week 1, maybe we're going to come in on the Monday after we get back from Thanksgiving and gap up open above the all-time high and run from there. Perhaps we're going to get some planted headlines about trade and they're going to take out and make a new all-time high when we get into trading this week and then come back for a deciding factor on December week 1. Or perhaps we're going to continue the grind lower and then leave it for whatever the future may hold for us December week 1, which it will be after we finish with the holiday next week. But ultimately, I just wanted to remind you that here is our July all-time high, clearly a breakout point that took us until October 28th to get to. So we've spent just about a month, we're coming up now on a month that we've been above this level. So as far as time is concerned, we've been about a month above it. As far as price is concerned, our all-time high has reached a nice clean 100 points above it. So we're definitely at a turning point here, a decision point where we're either going to continue moving or we're going to come back down and back test that 30.28 level eventually. Okay, so how do we get there and what's going to go on this week? Let's use a measured move idea of this week's range. This week's range that we just traded, November week 4. We traded our all-time high on Tuesday, and we traded our low for the week on Wednesday when we sold off down to 30.91. When I go back to this chart here for 1 second, you can see that we've got our first breaks of the 10-day simple moving average. This was significant because when you follow this line back down, you see that we go all the way back here to the area between October 10th and October 11th. This was a Thursday. This was the day we took out this cluster of simple moving averages and closed above it. And then we gapped up huge on Friday, October 11th. This was the day that the senior China delegation was in Washington. And we got this whole harebrained idea of the phase 1 trade deal proposed to us. We gapped up open on top of the 20-day simple moving average, and ever since we have been rallying. So here we are now, just this past week, making our very first breaks of the 10-day simple moving average. A hard break of it on Wednesday, but we reversed and closed well above it. Another hard break of it on Thursday, this was Tuesday, on Wednesday, held a higher low, came back and did not quite close above the 10-day. I thought that this was it. We were going down like a ton of bricks. But no, on Friday we came in, we traded down only to about 30.99, holding yet another higher low, and we reversed and we wound up closing the day above the halfway back point on the week. What did Friday, Thursday, Wednesday have in common? They were all closes down around 31.10 or lower. So there was clearly a force in the market that had a vendetta for keeping the market down below 31.10 on a closing basis because they were short of calls from down there. Well, if they come into next week short of puts instead, then we're going to see a line of support there where we're not going to be able to break 31.10. So that's going to be your first clue. Do we come into tomorrow? Do futures open and stay above 31.10 and we just keep going? Or do we start breaking down below 31.10 on futures and we see some tests lower and come in and open tomorrow below 3109.53. That would put us in the lower half of the range on the week and more vulnerable to testing below. If we break the low on the week, we're going to go test the 20-day. Remember, the 20-day is what we gapped up open over to begin with to start this rally. So it would be very meaningful if we broke it now. And ultimately, if we took the whole range of last week and doubled it down, that would get us to 30.55. 30.55 would hold us open above the gap that started off the month of November to begin with. Here was our close on October 31st, Halloween. Here was our gap up open on November 1st. And from there, we've had this latest leg. So it would make a lot of sense to come back and test these levels that we were trading back here on November 1st. If we come in and we are strong on futures tonight and we trade above 31.10, we're going to be looking for in the morning when the S&P opens in real time, regular trading hours, we're going to be looking for a takeout of 31.22, finally making that new all-time closing high that we did not achieve with the all-time high on Tuesday. Take out the all-time high and continue on our targets to the upside. The ones from our list that I gave you weeks and weeks ago, times 2 up the October low to that October 11th phase 1 trade deal day high, that would get us to 31.31. Maybe a little nominal new high and just sort of mess around in here between 31.22 and 31.31 for a few days. If we break out over that, our next target was 10% on top of the October low, which is the low for the quarter. That would make a lot of sense. Maybe then we back and fill and sit in this area here. If we get over 31.41, the idea of doubling up last week's range comes into play, ultimately heading towards 31.64. You know that we'll have to get through the 31.50 strike, and therein comes the 80 handle rule. Sitting and trying to get through 31.50 to get to 31.60 to 65, and above that to get to 31.80 and then 3200. Same thing on the downside. If we break down here, maybe hold above 30.60 to 65 for a while, and then break down towards 30.50, and then try to make our decision from there. So I'm mixing in a couple of things here. You've got your 80 handle rule, you've got the halfway back, you've got the rules of holding the simple moving averages. You've got lots of rules-based stuff going on. Use those rules and keep in mind that there was clearly an effort here to keep us below 31.10. That's the sign of an option seller. That's the sign of call sellers. Those call sellers were probably selling those 31.10 calls when we were all the way up here at 31.27, because that's what they do. They sell shit 15, 20 points in the money, and then they go out to futures and they make sure their bet works. What our job is as traders is to spot this stuff and follow it. So if they're doing just the opposite, maybe when we were plunging down here to 30.90 last week, they were selling short 31.10 puts, and they're going to make sure that we do not see the underside of 31.10 all of next week. And if you cannot see a break of 31.09 to 31.10 or so next week, remember that's the halfway back point of last week's range, and make sure that you remember that it could be put sellers that are holding us up sort of artificially by going into ES and buying it every time we start to get a sell program going. Okay, hope this all made sense and helped you better navigate next week. Really, 31.09 to 31.10 is going to be key, and the 10-day simple moving average is rising right towards there. If it's not there on Monday's open, it's going to be there on Tuesday's open, unless, of course, we open down to begin with. Then this thing is going to flatten and it's going to curl over, and it's not going to be pretty. Okay, have a great rest of your Sunday. Hope this helps you out. As always, good luck and good trading.